You're so behind. Slacker. Straight slacker.
We are live on YouTube, TikTok, Facebook, Instagram.
Which one's your favorite?
TikTok we get probably the most engagement on.
But which one's your favorite? Where do you spend your time?
TikTok has got me.
TikTok
If I
has
spend time,
got you.
yeah, if I spend time on anything, it's just because it's so quick. It's such a good.
Straight got you.
Yeah, I do like Instagram. Facebook is ironically getting not my cup of tea.
Yeah.
And it's so strange. I think because my brain's used to the TikTok speed.
Yeah.
And like what's going on in the markets, it's so fast to figure out. It's so fast to figure out.
All right, guys, don't forget, we're answering questions about buying houses, programs, what loans to get, what interest rates are, where are they going? Are they going up? Are they going down? What the heck?
Good, one job. One job. I don't know what happened. Did we lose sound? Oh, we got no sound. We're working on it. We're fast. You fancy, huh? You fancy.
All right, so once again, we're here to answer your home loan questions. How to buy a house, what programs, what interest rates, where they going, where we're at, what to expect in this next year, 6 months, 3 years, what interest rates are, what credit score do you need, what's the down payment, blah, 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 blah. So whatever your questions are, fill up the chat box. We'll answer you every single one of your questions, call you out personally, and hopefully send you down the right path.
Wow, look at that count right away. So we get asked a lot of times to review a DU. A DU, Brianna, experience with Lennar, we're going to tell you about that in just a second. When a DU is a desktop underwriter, and then if you have a loan officer, a licensed loan officer, he gets approved eligible. So we review DUs often. A lot of times a realtor, not even my deal, not my deal, they'll just say, hey, can you look at this DU and tell me if anything looks fishy? And I just got one on the way in, so we're going to review that DU live with you right here. So this is what loan officers get to approve you. It's called Desktop Underwriter Approve Eligible. So the first thing I look at a DU, I'm looking at it right now. You're not going to see the private parts, obviously. But I look at how many times have you run the DU. Why? Because if you run it and something didn't work, like the income didn't work, or the assets weren't there, or the credit score wasn't good enough, something, then you had to back up and clean something up. Maybe you didn't pay off a debt. Maybe your debt to income ratio was too far. Maybe you have the wrong loan program. Maybe you didn't put in mortgage insurance in there. But how many times you've run the DU tells me a lot, whether or not this guy actually qualifies for a house. So when I look at this DU that I'm looking at, we can see it here. I see 2 runs. What do you see when you see 2 runs?
I see that you didn't get approved the first time, so you made an adjustment and did it the second time.
Does 2 send you back a lot or not?
No.
2's good. I actually think if somebody came to the table with 2 runs, that means they had a really, really solid file. What else do you see?
2 borrowers.
2 borrowers. Okay, we get to see both borrowers. They're not husband and wife. They're 2 different borrowers on a file. In order to make a file work, a lot of times, we will get a non-occupant co-borrower, brother, cousin, aunt, uncle, sister, mother, whatever, and we will put them on the file. We always get the thing, can I use their income and not their credit, my credit, but not their income? No, each person is gauged individually. So, next thing I see is an LTV of 80%. Oh, that's great. And a note rate of 7.375. So, when I see those 2 things, I think, all right, cool, this guy's got money. I got to see the money. And 7.375 is going conventional. And that's actually a pretty good interest rate, probably not bought down. It's probably a par rate. So that's the first thing I think of. What do you think?
I go to ratios. So
Okay.
I'm looking at the front end, back end ratio. I'm looking at 37-38. 37 front end, 38 back end, which is conservative, very conservative.
Okay.
And then, of course, looking at the purchase price and the loan amount, which you've already kind of talked about that with the LTV, they're at a 1.15 million, which means they're underconforming. So they're aiming under a certain loan limit.
$1 million loan, guys. $1.1 million loans.
And then 57 months reserved.
That's a lot, dude.
So after down payment, after closing costs, this is what they have left over. And that means they have 57 months of mortgage payments, which is an insane amount to have, which is which leads me to believe this is a strong file.
Yep.
Just already is a strong file.
So we can usually look at the first page 2 or 3 and find out a lot about it. So the next thing I went to income, good income. This is $1 million house. We get this commonly, by the way. A realtor who's like, hey, listen, you're not the loan officer on this, but can you take a look at this real quick? And I'll look at it and I'll say, hey, listen, this is good for this reason. This is good. Here's my concerns. And usually the first place I go is the bottom of the whole DU because there's months of reserves. And if there's only like 2 or 3 months of reserves, I know this loan officer was kind of whittling things away to try and make it work. This one, like he said, has 57 months reserves. That's great. The next thing I'll look at, if I'm looking at it fast, FICO score. This guy's got an 800 FICO score, 800 FICO score with 57 months reserves. The rest of the file is, you kind of get the benefit of the doubt on almost everything because 800 FICO score is amazing, amazing. So talk about, is there a limit on how many mortgages you can have? We're going to talk about that Lennar question in just a second because that's a long one. I hope you're ready to take notes on the Lennar one. But is there a limit on how many mortgages you can have? Technically, no, but I will say that once you get above 4, guidelines change. Once you get above 6, guidelines change. At 8, it starts getting very difficult because you're kind of like a big-time real estate investor when you have 8 mortgages, and the market could wipe you out. It could be like, hey, listen, I built all these really strong, sturdy houses on the beach, and they're awesome and strong and sturdy. And here comes a tidal wave. I don't care how good you were, you're going to get wiped out. Those houses are going to get wiped out. So the mortgage industry does factor that in. I've seen as much as 12 financing the 12th, but it gets really weird above 8 because you have to have you have to have certain amounts of reserves. There has to be LTV on every single property. It's when you start to get a lot of properties, like if you said, hey, Lee, I'd like to buy a property. I'm like, yay, that's awesome. You're like, hey, I have 7 others. In my head, I'm like, oh, God, 7 others, because it's not small. When you have 7 others, I have to pull property tax roll on every single one of them. Loan to value, I have to do assessment values on all of those. I have to see your note. I have to see your mortgage payment, how much you're renting it for, how you reported it on your Schedule E. Has it been a loss? Has it been a pro? Are there any issues? And I have to do this for every single property. And the more properties that show up, the more difficult the loan becomes. So, can you do a lot of them? Yes, you can. I've seen 12, but at above 8, it starts getting weird. Let's talk about Lennar. What are your thoughts on Lennar?
Well, it's a builder, okay? It's a builder. Mm-hmm. They're a huge corporation. They've been doing this for years. They have it all figured out. And not only do they have it all figured out, they have the path that they want to walk, okay? So as a buyer, you should know this. When you hire a real estate agent, guess who their boss is? You. When you hire your loan officer, guess who their boss is? You. We give you our advice, we give you our experience, but if you want to go left or right as far as you want, you can. Now, in some cases, that will throw off your scenario. So for instance, if you want to put it in an offer and you say, I want to offer $100,000 less, could be ridiculous based on the market. An agent, a strong, good agent will say, we're not going to do that. But a weak agent will say, okay, we're going to go ahead and do that. But that doesn't stop you from being the boss. When you go to Lennar, you're not the boss. You are their pawn to play with, and you're going to follow by their rules if you are following their rules. Now, do you have to follow the rules is the question. And by large, and this isn't just Lennar, there are lots of builders across the country, big ones, middle ones, small ones. And the truth is, you're still the boss. If you know what you're doing, if you have a strong agent and a good loan officer that can guide you through these waters. So there's my little piece on the builders.
Well, let me tell you that Lennar is, Joe Rogan retiring? What the heck is that? I got to get back to that.
That's not real. Whoville hater.
Whoville hater. I don't know about that. Lennar, they build an amazing product. The product is the house. They build beautiful, beautiful homes and communities. Lennar is amazing at that. They really are. They're amazing at it. However, they are not kind to the buyer. They want to make money, and they know how to take advantage of you left and right. How do they take advantage of you? Yeah, I think I'm going to get into this. You think I should? Sure, why not? Here's what happens. Let's say that you're buying a $500,000 house from Lennar. That's a mansion in some parts of the country. That's not even doable in Los Angeles, New York, Miami. So what? $500,000. So if you buy a $500,000 house, they built it from scratch. So let's just say it cost them $400,000 all in to build that thing. They're going to make a profit of $100,000. Okay, good profit. 400 to one. That's $100,000 profit. But do you know how they can make more profit? There's commissions on the front end of it. There's the buyer's agent and the seller's agent. Traditionally, they get 3% each. So that is about $30,000. So Lennar, what they do is they hire a captive agent, and they don't pay them 3%. They pay them their salary plus a little override. They pay them some type of salary plus an override. It's a good salary, but it's salary plus an override. And then they don't want you to walk in with a buyer's agent. They want you to use them as the buyer's agent, because in most states you can dual represent. Not all, but in most states you can dual represent. So they get to keep that 30 grand if they can not have you have an agent. So they don't want you to have an agent. How do they do that? They can't just trick you. Yeah, they can. When you walk in on the weekend without your agent, you sign in. They're like, hey, you can see the house, no problem. Sign in right here. At the bottom of that sheet, it says, I am hereby represent, I do not have a realtor. Cool. They got it in writing. You think I'm kidding? Happens every weekend. Every weekend. So you go in there and you're like, hey, I really like that house. Let me talk to my realtor. They're like, hey, you already signed a contract stating that you didn't get a realtor. You don't have a realtor. So you can't use that realtor. You have to use our realtor. Now, is that entirely true? Not entirely true, but it's their rules. It's their game. It's their house. They built a good product, and they get to play that game. Next thing they want to do is go, hey, listen, you have to qualify with our lender. Now, can they legally mandate that you use their lender? No, can't legally mandate that. It's against the law. But they can say, we can't qualify you unless you cross-qualify, so you have to qualify with our lender. Can they say that? Yeah, they can. They do. And they will want you to use their lender. Why? Because if you use the lender, there's money on the front end, which is the loan officer, the bank, and how they get you the loan. Call that 3%. And then there's money on the back end where they sell the loan. They sell the servicing rights. So that's another 3%. So there's 30 grand on the realtor side, 30 grand on the loan side. If they can keep you captive, they made 100,000 in profit plus 60,000 in commissions. And that's just the start. There's way more stuff they do. But their houses are beautiful. I will say their houses are just beautiful.
So when it comes to buying in a new build, don't be scared of them. Mm-hmm. Just hire the right team. We'll guide you through it. You'll know what to do next. And the truth is, if done right, it can be a very great experience. And most people go through this without even knowing what happened, knowing that they were forced to do things. And one of the enticing things that they do when they do a cross-qual, and it's a little sneaky, is you're happy because you came to Chris and Lee and you said, hey, Chris and Lee, I want to get qualified. I've been watching you on TikTok for years and it's finally ready. I saved my down payment. I fixed my credit. I'm ready. We qualify you. We say you qualify for $700,000. And now you're excited to go into a new build. And then you walk into a new build and say, well, you have to cross-qual with our lender. And then their lender says, yeah, you qualify. Chris and Lee know what they're doing. But if you work with us, we'll give you $15,000 in lender credit or seller contribution. And then you go, holy crap, I love Chris and Lee, but these guys are throwing $15,000 at me.
I love 15,000 more.
And I really want that $15,000 because I can get floors, or I can get countertops, or I can get blinds, or whatever the case is, or I could just save $15,000. So there's a little bit of sneaky tricks that they play in there, but here's the truth. Most of the time that's coming from the seller, which is the builder. So if it's coming from the seller, shouldn't it be irrelevant which lender you work with? And that's when you escalate. That's when you call corporate and say, hey, corporate, I want to buy your house, but I want to use my own lender. You'll get the same package, you'll get the same deal, you get the same everything you want, and you get to work with Chris and Lee. So keep that in the back of your mind when you're shopping. If you want to qualify through us, we know how to fight these guys. We know how to attack it and approach it, but just know that there will be a little bit of speed bumps that we need to go over.
Shauna, what's the credit score have to be? FHA, 580 or better. Fannie Mae, Freddie Mac, 620 or better. VA, irrelevant. Credit score doesn't matter. It's residual driven loan. It's a different type of calculation. But 580 just lets you start the qualification process. If you just have a 580 FICO, there's probably something in there that caused the 580 that we have to take a look at.
Millennial baby, no, don't buy homes made by banks or private investors. Buy land and build your home.
I like that idea, millennial baby. We're actually going down a track where we're doing the FHA one-time construct and VA one-time construct, and we're trying to help people build their house from scratch. It's a lot of work, but we've kind of got reason to interest in it right now.
Yeah. Thank you for the love, Todd. Whoville Hater, is there a limit on how many mortgages you can have?
I had that one. I did that one already.
Oh, okay. How many is it?
Well, there's not technically, but
12.
12?
12.
12.
12.
Is that a limit? Hard
wanna-
limit?
Yeah.
No, you all skew in
Fannie.
right after 12. After.
Oh, okay. So if you, how many mortgages, doesn't matter what it is, as many
Yeah.
as you want. Okay. Traditional financing, 12.
Yeah.
Whoville Hater, did you hear about Joe Rogan retiring? Tell me why you said that. I do not believe you. I follow this guy pretty close. I listen to his podcast, watch his comedy, listen to other shows that he's on. Tell me why you say that.
Whoville Hater, we're both Joe Rogan fans. You know why? Because he used to be like Hollywood, all the way on that side of Hollywood. And the more he lived and talked with people, he's like, hey, that's crazy. Let me move over. And he doesn't quite own it all the way yet, but he does live in Texas, and he bow hunts, and he eats beef, and he has guns, and yeah, and he's got a big badass 4-wheel drive. I think he's kind of going from one side to the other, just well-rounded. We're big Joe Rogan fans.
Well, he has a unique tool that a lot of us don't have that kind of ability, which is he gets to talk to everyone and get everyone's perspective, but not just regular people. He talks to the experts in the fields and gets the true data, and then is able to make a decision. And that's why a lot of people hate him, because he's like, here's the facts. If you don't like it because of the, or if you don't like it because of the purple hair or blue hairs, he gets the truth and the reasons why. So that's why he has that perspective. But I respect him because he actually goes and says, I'm wrong sometimes, and here's why I was wrong.
Yeah.
A lot of people are afraid to do that. Ash 1922 got credit to 641, 18K down, 100K income. That's a pretty good file, Ash.
Damn, that's a badass file, not just
I
pretty
see
good
approval
file.
in your future.
I see you buying a $450,000 house or more.
Brianna, I'm trying to move in winter, but don't know what builder to go with in Texas with a teacher's salary. Now, Brianna, don't be hard on yourself. Teacher salaries, I know a lot of people say they don't make a lot of money. I know a lot of teachers that make a lot of money.
120 grand.
That being said, it depends on where you're at, depends on the school district, depends on the degree, depends on how much more you're advancing in your career. But have you put teachers in the homes?
Yes, many.
Across the nation.
Yeah.
Across the nation. So, Brianna, depends on what the file looks like. I think there's a good probability. As far as what builder to go with, that's up to you, young lady.
Yeah, and if it's your first time home, I would highly recommend you entertain a new build, but also entertain SFRs that are already built. There's problems that you can avoid by getting an SFR that's already built. Like, for instance, a lot of people get into a new build. They don't know this, but they are required to make their front yard and their backyard fit the HOA standard. And that can cost a lot of money, like 30 to 100 grand. That's a lot of money. But they don't put that in the build. If you buy an SFR that's already in the neighborhood, that's already been through this, then they've already improved the land. You just have to change it to your version or keep it the way it is. But there's pros and cons to each. If it's your first time, I wouldn't go new build first time. I just wouldn't go new build first time. Maybe second or third when you actually know everything. So yeah, if it's the right community and you have a lot of money, that's another issue.
And we could definitely help you in Texas, Brianna. Whoville Hater, where do you go? If I build a house with my own money, can I get a mortgage and appraisal value and pay it myself? Can I get a mortgage on appraisal value and pay myself?
Well, what you're talking about is a
Pay
refinance.
yourself
Yeah. You're talking about a refinance. So if you put all your money in and you built a house and you say, hey, listen, I'd like to refinance this house. Yes, there's a problem. There's a little bit of a problem. It's not as clean as a house that's already been financed because chain of title, how did it become certificate of occupancy? It has to meet all the requirements, like all the requirements. If it does, just refinance. Pretty simple. Yeah.
And yes, it is a cash out refinance. So if you do everything right, simple process. Take you 3 weeks and you're done. Donnie Young, what state are you guys residing?
He resides in California. My primary residence is in Texas, but I spend a lot of time in California. We're currently in Riverside, California. We do all loans in all 50 states. Just opened one today in Nevada, Las Vegas, Nevada.
User 6213. How do I apply with you?
Very good question.
Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the number on the screen. But don't dial right now because we're live and we will not answer. You can dial after the live. This will disappear in 5, 4, 3, 2, 1, bye.
Boom. Brianna, does Texas have any new builds with no HOA?
HOA are very interesting. A lot of people don't like it. It does have its benefits, but it's a hidden cost, and it really hurts your buying power. Not a little bit, a lot. What's the highest HOA you've seen?
1,000.
I've seen 1,000 too. 1,000 HOA, it's crazy. And how much does 1,000 reduce your buying power?
Probably close to 200 grand, 180.
A lot. A lot.
Whoville hater, I love Joe Rogan. Been following him for years.
Me too.
And Team Sanchez says Rogan has a Tesla.
He also has a...
he has a Tesla,
he
but
does.
he has 100 other cars.
Yeah, he's got muscle cars, he's got old school. We're old school Joe Rogan fans. We've been following him for a long time for lots of reasons. But I was looking at the TRX, the Dodge 2500 TRX, and when Joe Rogan got it, I was like, all right. And then I heard the problems he was having with it, and I'm like, okay, let me hold off a little bit.
Let me know when they solve the problems, Joe.
Yeah.
Brianna Monroe, what is a FFR?
SFR. SFR is, I'm sorry, that's me not making allowance for, I know the
He's on
jargon.
the spectrum.
SFR, single family residence. That's a house that's already been built, been around for a little while. We call them
Resale.
SFR, resale. SFR. So you should know that SFR is a category. So is PUD. PUD is planned unit development, which is a bunch of houses in a development, planned unit development. And they're houses, but it's a specific type of house, PUD. Condo is usually attached to another one, and there's a condo association fee, and they fall under a different situation. So when I say SFR, I'm talking about a house that's standalone, technically a single family residence. And the reason they call it single family is because you can have a 2, which is a duplex, 3, triplex, 4, quadplex.
Yeah. So just resale properties. Just resale. User 6213. A new house would take 6 months to construct. How early should I have financing part ready?
Before you start?
And 6 months is a good goal.
That's a cute goal. It's not realistic. Yeah. If you're a builder and you've got everybody on lock, maybe. But if you're just building it for the first time, 10 months, 18 months.
Expect delays.
Yeah, that's the reality of things. Yeah, that's the reality of things.
Unless you got someone in your corner, the T word, the orange man, he can knock that out in 3 months. Whoville hater.
I'm guessing you're in Texas for 6 months and 1 day for tax reasons. You're a smart person, Whoville hater. You're a smart Whoville hater. You really are.
Yeah.
Yes.
Donnie Young, looking for new construction builder for fourplex. Do you know any?
Where, Donnie Young? We know some people in California. Met with somebody for 2 hours yesterday on building new houses and ADUs. General contractor, successfully put up ADUs, been doing it for years. Yes, we know people across the country.
Yeah. Brianna Monroe back. Okay, I'm okay with buying a single family residence instead of a new build. Thanks for the advice.
Yeah, Brianna, you should have a good realtor. You should talk with your realtor. And even if you're not ready right now, just tell them that, hey, I'm not ready for about 6 months to a year, but can you kind of guide me in a direction? And there's something that they will guide you on that you probably don't know about. It's called tax base. So certain areas, if you go here, tax base is higher. If you go to this side of the street, tax base is lower. If you know that, that increases your buying power immediately because tax base is probably the biggest impact on your purchase. HOA is your second biggest impact.
Yeah, Brianna Monroe, heard Texas housing inventory is up to pre-pandemic levels. I actually heard data that some of the tech companies were moving to Austin.
Mm-hmm.
As a matter of fact, Elon Musk moved some of his manufacturing plants there, anticipating a wave of employees coming in, but he backed off of it because of the state of the economy. Mm-hmm. So what that means is they did load up houses. They loaded up a bunch of houses, and they're getting ready to hit the market. So there is going to be probably some softening in the prices near Austin. That's just what I hear. Yeah. I don't talk to Elon on a daily basis. But do your research. Talk to a good agent. If you need one, reach out. We'll hook you up.
Maybe you could call him later today, Elon.
I'm live, man. Maybe after the live if I have time.
Hey, I do. My house is in Lake Travis. It's right near Austin. It's about 30 miles outside of Austin. But I know that area pretty well. And where Elon built the new company, the Boring Company, called Buda, Texas. There's houses going up left and right, all over the place. And what you said is true. The market went like this. It went, and now you can actually find really good prices in those areas. Butte, if you're into, and Butte's probably with no traffic, which is hard to find because the 35 is always clogged up in Austin. But if on a good day, Butte is probably like 25, 30 minutes from downtown Austin proper. So it's a wonderful area. By the way, not a small area. It's not like a little weird area. Butte is huge, man. There's a bunch of shit there. There's a bunch of stuff there. Bunch of good stuff out in Butte. And anyway, there.
All right. Donnie Young is in Fresno, California.
Fresno. Looking for a builder in Fresno.
We can make that happen, man.
Our general contractor.
We can make that
all
happen.
day long, right? All day, every day.
Brianna Monroe. Shopping for a realtor is like shopping for a husband. The good ones are hard to find.
Brianna, you nailed that,
No,
man.
I disagree.
You think so?
I disagree.
I think that there's so
I think
many...
that's entirely different. Because if you're looking for a good man, I think there are a lot of places. The good men just want specific things.
Keep digging. I don't know what you're looking for.
I'm standing on top
Brianna,
of the mountain.
this is awkward silence, man. This is awkward silence.
Anyway, Brianna's moving from California to Dallas-Fort Worth area. Universal Studios is coming to the area, so I want to buy there. I did not know that. That's cool.
Universal Studios is going to DFW?
That's awesome.
Dude, that's amazing.
I honestly did not know that.
I honestly did not know that.
Tell us more about that, Brianna. What do you know? What do you know?
What do you know? Are you in the entertainment business, Brianna?
So are they moving from Hollywood, or are they putting a whole other situation there, kind of like Walt Disney World? So, because Disneyland's in California, but Walt Disney World's in Florida, but
adding
they're
just in
still
addition
both
to
doing their own thing.
Well, Universal Studios, if you go to California, Southern California, that's a must tour. That's a must.
New one.
Yeah, a new one. So this will be even more cutting edge. Like Universal Studios, I've been there 20 times to Universal Studios, to the actual studios. I've been there to eat 100 times or more. But Universal Studios is amazing. Anybody who comes here, they're like, hey, I want to go to Disneyland. I'm like, yeah, you should go to Disneyland once. It's probably not going to be what you think it is. You should go to Universal Studios. That will be everything you think it is. That Universal Studios knocks it out of the park. So does Six Flags Magic Mountain. What is your... Oh, also... what's the other one? Not Magic Mountain?
Knott's?
Yeah.
Knott's is fun.
Yeah, Knott's is fun.
I'm a roller coaster guy. I love roller coasters.
I like the accelerator, man. The accelerator is insane.
I've seen this other one that goes... anyway. So, I live in Southern Cal now, and I love Universal Studios. Where are you at, Brianna? What city?
Yeah, you know what? The piano bar, man. Universal Studios piano bar is just like an experience.
Is it still there?
I think so. I've been there in years, but
Me either.
Well, I used to live right around the corner from it. I would go there often. It was awesome. I loved that area. So they're building a Universal Studios in Dallas.
Apple Valley. All right. You're right down the street from us.
That's a bit of a drive to Universal Studios, though. You can't go to dinner and... Yeah, not with LA traffic, because if you're going to dinner at Universal Studios, that's probably a 3-hour drive each way. Without traffic, maybe an hour, but with traffic, 3 hours.
You know when you travel the world, how you meet like people from different parts of the world, whether you're going like Mexico, Europe, those places, and you start a conversation and they're like, "Hey, where are you from?" And I'm like, "California." They're like, "California? Like what part of California?"
Don't say Riverside.
If I say Riverside or Rancho Cucamonga or San Bernardino or any of those things, they're like, "Where's that?" You know what you have to say? You don't even say Los Angeles. You know what you say? I'm 45 minutes from Disneyland. They're like, "I know where you live."
Yeah.
The world knows where Disneyland's at. The world.
Yeah. Well, when you're, because I travel a lot, and when I was in like Europe last time, they're like, "Where are you from?" And I'm California. What part? And if I say Riverside, they don't know shit. I say
Riverside?
Yeah, Los Angeles. They're like, "Los Angeles, Hollywood?" And I'm like, "Yes, they're the same." No, they're not. But you can't explain that to everybody in Europe.
Homeless everywhere, regardless of what city you go to.
Oh my
It
God.
is the same.
Yeah, it's not what you think it is.
I was there this
It's
weekend.
not.
That city is ugly.
Really?
Oh my God, man. Right outside the freaking studios.
Why were you there? Why were you there?
I went to go see John Mulaney at the Hollywood Bowl.
Oh, that's right.
Had a good experience. You
The
guys like
Hollywood
John
Bowl.
Mulaney? I love that guy.
Hollywood Bowl.
Yeah. Hollywood
Dude,
Bowl's an awesome
Do you know what the
theater.
prices of the houses are there?
A lot.
Like-
a lot.
What's the cheapest you get a house around the Hollywood Bowl for?
Cheapest? $1 million.
Cheapest.
$1 million.
I don't think you can get one for $1 million.
It's like a one-bedroom,
no.
one-bathroom
I don't
apartment.
think you could get a $1 million. I don't think you could
Guys, find us a local place close to the Hollywood Bowl and let us know how much it is. The cheapest one. The cheapest one. Yeah. Brianna said, or Team Sanchez said that he's 8 minutes from Universal Studios. He never goes.
8 minutes, dude. You should be going. Universal City Walk is like the best. They got really good restaurants. Like Bubblegum Shrimp is there. They got all these. They got
Rock.
And then the High Fly, the indoor skydiving situation. That's pretty badass. The Hard Rock's there.
Cheesecake Factory.
It's all high end shit, man. It's all, and the parking is. They did pretty good in the parking. There's like
a lot better.
8 levels of parking.
Cinnabon is there.
Yeah.
If you want to die real quick, Cinnabon.
Real quick, man. You could like, you know what? I'll take a cardiac arrest right now, please.
Make that 2.
You got 2 of them with cinnamon.
Brianna, you're 2 hours. Yeah, you're 2 hours from Disneyland. That's for sure.
Yeah.
And Anaheim is beautiful but expensive. Yeah, absolutely expensive. Right off, and traffic like crazy. Who wants to deal with that 91?
It's weird. You know what? I've been in California, like living in here on and off for 30 years probably, and homeless was not a problem. You know what a good fun weekend was to go down to Venice Beach and just watch the entertainers and street performers, and the beach is there and good food. Now it's homeless people everywhere. If you go to the train station, is it Graham Station? It's like
Union Station.
Union Station. If you go to Union Station, that used to be a fun trip. By the way, you in Apple Valley, if you want to try a fun trip, take some notes on this because it's a really good day. Really good day. Drive down to Rialto is probably the closest, which is from Apple Valley 30 to 45 minutes, somewhere in that range. So drive down there and then get on the, what's it called?
Metro.
The Metro. Thank you. He knows this shit.
It's a train.
And you get on the Metro, and it's like $10, maybe $8, something like that. And you just get on the Metro, and it's not going to be fast, but you're good. You're going to just hop on a train. It's a good-looking train, nice train, and you're just going to go from there all the way to Union Station, heart of LA. And it's, I don't know, maybe an hour and a half, 2 hours, but it's a very fun ride. It's a fun ride. Barstow is going to have a boom with the bullet train to Las Vegas. Yeah, Brianna, I think you're right. And I've been thinking that for about 15 years, 20 years. I own some property up in Hesperia and in Victorville, and I thought it was going to be amazing 10 years ago, but it still hasn't happened.
It's the same. They got a ton of restaurants in Victorville now. Ton of restaurants.
Yeah.
Really want to move to San Diego, but it's too high. San Diego's beautiful.
It's so beautiful.
Love San Diego.
It's so beautiful. It's so expensive. It's ridiculously expensive. Chula Vista was probably 800,000 for a long time, but I think it's all in the millions now. Everything's in the millions in San Diego. It's crazy expensive. So, what do you got, man?
Well, I want to know what you guys want. So I want to play to your guys' tune today. So let us know what you guys are looking for. What do you want to know about mortgages? What do you want to know about buying houses? You want to know what the challenges are, the success stories, what it really takes to buy a house as far as putting a file together. Like there was a young lady in here that said she made a good income, had good credit, and good assets, and we can eyeball this stuff. So if you just tell us what it is, I'll let you know if you're going to get approved or not. Now, if you're below a 620, challenges. In 2020, if you would have said, hey, Chris, I have a 580, but I only have the down payment, I'm going to say, you're approved, man. I would say you're approved. We just got to figure out how much. Today, that does not exist.
Yeah, it doesn't
exist. You need reserves. You need a couple months mortgage payments added to your assets. You need to be able to be a little bit more conservative on your ratios. It's a lot tougher today to get financed, but not impossible. As a matter of fact, I put a file together for a person that went to another lender, and the other lender said, you have to wait a year, okay? And I said, they didn't try to give you a scenario that worked. They're like, what does that mean? I'm like, manipulate the file.
Yeah.
See what the file's asking for. So,
Alt QM works. You can make an Alt QM work when conventional conforming doesn't work.
Well, when you do an approval, let's say you're doing traditional financing, FHA, 3.5% down, and it says refer. Refer doesn't mean declined. Refer just means that you're not approved. So what we'll do is we'll add assets. We'll do a little simulator on your credit. We'll figure out exactly what it would take, and then we can call you and go, hey, pay this credit card, pay this credit card, add another $2,300 to your bank account, and you'll be approved. And a month later, people call me back all the time, and they're like, hey, I did exactly what you said. Can I get a house now? And they're out shopping. So there's different ways of approaching this. Donnie, which bank do you recommend?
Whoville Hader, man. You're skipping Whoville Hader.
I forgot your guys' relationship.
Yeah, Whoville Hader. My mother owns a condo in the Gaslight in San Diego.
Gaslamp.
Gaslight.
Gaslamp. Well, you said Gaslamp.
Yeah, okay, yeah. Gaslamp
Gaslamp District's badass.
That's so much fun. When you're a single person, single man, single woman, That's an amazing spot, man.
Your mother's partying it up,
That
dude.
is Party City. It's like 6th Street in Austin. If you haven't, actually 6th Street in Austin is probably better. 6th Street in Austin is like Mardi Gras during Mardi Gras time in Louisiana. Crazy, but close to that in California. The only place I've ever seen it is Gaslamp District in San Diego. Around Friday night, Saturday night, it is so active with nightlife. The restaurants are so amazing, and it's so expensive to buy a house there. It's insanely expensive to buy a house there. I have a client who was pissed, because he bought a house because he was a Chargers fan. He bought a house really close to the stadium and paid the
Chargers
premium.
fans are stupid.
He bought a house because he was a Chargers fan. I'm going to fill in the rest of the story in a second. For those of you who know, you know. But he bought a house not far from the stadium because he was a Chargers fan. And he bought it maybe 10 years ago. And he was loving life because he gets to go every weekend to the Chargers. And then they sold the Chargers. And then he's like, I don't know. I don't want to live here no more. This is all about the
Still
Chargers.
nice.
It's still nice.
It's nicer than L.A.
But it's not Chargers fan nice like I can see the stadium. Because you've been to the Chargers game, right?
Yeah.
Chargers game.
Qualcomm.
Qualcomm Stadium. You just go there and house. These guys rent their parking lot. They're like, hey, you can park in my driveway for $50. They're like, hey, put a park car for 2 hours. $50. Happens all the time. Beautiful area. And if you're a Chargers fan, it's amazing because every Sunday during football season, that place would pack
With Raider fans.
with Raider fans. And then the Chargers sold to who?
They didn't sell, they moved.
Oh, they moved to Los Angeles,
Los
right?
Angeles.
Yeah, they moved to Los Angeles. And then everybody in San Diego that had that house right next to the Charger Stadium, they're like, I guess minor league baseball?
Who knows, man?
Concert?
That was stupid. But the new stadium's badass.
New stadiums.
Huge.
Yeah, what's it called?
Huge.
SoFi?
SoFi.
SoFi is amazing. I went to a concert in SoFi. I've been to the Texas Stadium, the big one, the badass one. I think it still beats SoFi.
AT&T?
Yeah, AT&T Stadium in it's not Arlington, it's not Dallas. Oh, come on, help me out.
DFW, isn't it?
No, it's not DFW.
Dallas.
It's but
Outside of Dallas?
Yeah, it's outside of Dallas. Anyway, so that big stadium is amazing. The Megatron is the biggest one in the world, I think, until the Las Vegas Stadium opened.
I've never been.
think
I'm
they
not
beat 'em.
homosexual. Whoville hater. My mom bought a house in the 80s when my dad was in Camp Pendleton. Oh, yeah. So did she keep that house, or is that what she sold to move into the condo? Mm-hmm. Because I was actually sitting, I was having dinner at Nobu in Gaslamp, probably about 4 or 5 months ago, and looking outside, you can see the sky-rise condos. Is she in one of those huge ones that goes up like 100 stories? Because those things, I was looking at them going, it would be awesome to live in one of those. Because you can see the whole freaking ocean.
Well, it's a whole different
and
life.
the city.
It's like living in New York. You live in a condo, so you're not gonna have a dog. If you do, it's a little
You got
tiny
a
dog.
doorman.
You got a doorman. You're probably not gonna have a car. If you do, it's gonna cost you a lot for the car.
And you don't need one.
That's what I mean. It's a different life. It's a whole different life.
Yeah. She could have bought 5 houses in my city. Yeah, no doubt about
Yeah.
that. Which bank do you recommend for a construction loan? Asked Donnie Young.
What do you think?
Ours.
I think so too.
Ours.
Yeah.
We could do a one-time construction if you're going to go with an FHA or a VA. Which, okay, you guys should know this. Our company actually works with the builders in some cases. Not every case. Some cases. So if you go to a Lennar, there might be a New American Funding representative. If you go to a D.R. Horton, there may be a New American representative. We actually work with the builders, and these are the programs that we use with the builders. So each house is done as a one-time construction loan every single time. So we can make that happen for you. We can definitely help you out. Your FICO score is right in line because you absolutely need a 720 or better.
Yeah.
So 750 plus, you're in the freaking wheelhouse, Donnie Young.
Donnie Young, 861.
Brianna Monroe, there is no way to look at the file without running credit. Subscribe to Experian. There was no way to look at a file without running. No, so here's what it is. When you subscribe to Experian, they're going to give you an Experian score. Not a score for credit cards, not a score for mortgages, not a score for houses. They will give you all the data with Experian, but Experian isn't the only one that matters. You need all 3 tri-merged using the FICO 5 algorithm, and with that, we'll know exactly where you're at when it comes to buying a house. So a lot of people call us. A lot of people, and they're like, hey, I don't want to pull my credit, but I want to buy a house. seems ridiculous. Like, why are we even having this conversation? I will guide you as much as I can, but to be honest with you, I can't diagnose your case without pulling your credit. It's like going to a doctor and say, hey, doctor, I think I have cancer, but I don't want you to run any tests.
Yeah,
I just want you to tell me exactly what I need to do.
Here's what my psychic said.
Exactly. It's a little silly, guys. So here's the thing, too. People don't want their credit pulled because when I pull my credit, my scores go down. Well, here's the truth. If you're trending down on credit, maybe because your utilization of credit cards are high, maybe it's because you made a couple late payments, maybe it's because you just bought a new car, then yeah, you're going to have a lower score when we pull your credit. But if your credit is trending up, maybe because you hold low balances, maybe because you make all your payments on time, then when I pull your credit, it's going to be up. So when you pull your credit, it's not the credit pull that's affecting your score. It's the way you are conducting yourself with your credit that's affecting your score. Mm-hmm. And if it drops 10 points, who cares?
What's up, Carlos?
If it goes up 10 points,
Jersey,
who cares?
What's up, sweet spicy Shay?
As long as you're doing the things necessary in order to maintain good credit, who cares?
Who cares?
Now, here's the other thing. There's people who pull their credit all the time doing silly stuff.
Yes.
Like saving 20% at Kohl's, saving 20% at Home Depot, buying a new car, getting a credit card at Sears. I don't know if you can do that anymore because Sears is only online. But my point is, if you're always pulling your credit, then yeah, they're going to say, this person has no discipline. You have no discipline. So I'm going to ding you a little bit. And that's not us. That's the credit bureaus. But if you're a person who doesn't pull their credit, and you're like, I think I pulled it a year ago when I bought a car, and I go to pull your credit, you're going to be fine as long as you've made all your payments on time. So take that into consideration when you're looking into this.
Whoville Hater says her mom still has it. Bought it, a condo 2019. It's almost worth twice as much.
Good job, Mom.
From 2019 to 2024, that's 5 years. Twice
Dude,
as much.
Your math is insane.
I know. Dude, I know I'm so good.
Hire this guy.
I am so good.
Hire this guy.
I'm so good. Anyway, let's just say that it was worth $600,000 5 years ago. 1.2 million. Is that about right in San Diego? I think so, right?
Maybe higher.
You think so? Well,
San Diego's expensive.
2019. I'm thinking 2019. You could probably get a house in the gap like 800 grand. Probably 800 grand. 1.6
condo,
million.
you mean?
Yeah, condo.
What's the HOA on that?
Yeah. Oh, the HOAs are crazy on those things.
CCG. I checked my Credit Karma score to buy a car. Was laughed at. CCG. That's what happens, man. Sorry to hear that.
Yeah. We're not laughing at you. We're laughing with you.
Brianna Monroe. I got approved from a few lenders last year, but it lowered my credit score, and I almost cried. That's what I mean. You're pulling your credit. You're pulling your credit. You're pulling your credit. Now, there's this thing out there that says, hey, if you pull your credit by all these lenders because you're going to shop and then get into a house inside of 30 days, it counts as one. Yeah, but you got to get in inside of 30 days. So if you went shopping for 6 months and then got another lender and then went shopping for another 2 months and then went to another lender, then yeah, your score is going to do that. That's what I mean. It's the discipline you have. So here's the other question. Why did you go to so many lenders?
Yeah.
Okay. Was one not doing the job? Or you just trying to get a better rate? Because we can run scenarios based on your data. Mm-hmm. So if you told me, Chris, here's my LTV, here's my credit score, here's how many reserves, here's this, here's this, here's this. I can tell you what rates are. Mm-hmm. You don't have to pull your credit for that. We need your credit to build a file. So take that into consideration. Maybe you just give us a call.
And people ask me why, if there's so many lenders pull my credit or so many, if I pull, why does it go down so much? Here in the mortgage business, here's why. Let's just say that we go into contract for a $500,000 house. Well, the credit bureau does not know we're in contract for the $500,000 house, only the bank. And the banks don't talk to each other. So let's just say you started a loan with New American Funding, but at the exact same time you started a loan with Wells Fargo. And at the exact same time you started one with Bank of America and then Chase. None of the banks talk to each other during this process. So you could have financing going on with 5 different banks for that same house. 5 different banks, that same house. They're all going to ask for the same thing. They're going to say, hey, let's see your most recent paycheck stuff. You give it to all 5. They say, hey, let's see your assets. You say, hey, I have $50,000 in my 401k. You give it to all 5. Then on closing day, all 5 of them send $500,000 in. What? Well, now you have $2.5 million, and that's the big F word in the mortgage business. But the way they mitigate that risk is if you pull your credit too many times, they go, there's a chance this could happen. So they drop your credit a little bit so that the underwriters will go and say, yeah, we want to double check a few things. Yeah, and they run these things in the back office that loan officers don't know about. There's one called Cavers. They run Cavers on the background to see if there's something going on. Sometimes they'll do a mortgage rating. If you already have a mortgage, they'll check and see how that mortgage is going. Sometimes they'll do a statement of identity to make sure that you don't have any loans against you. But the reason that it goes down is because they're worried about 5 banks going at the same house and funding all at once. And then after you have the money, you bolt to a different country, and now you're a millionaire, and they got to figure out how to do it.
Brianna Monroe, I got approved for too low. Okay, so here's a strategy that we're going to need to do because you're coming to us next, okay? We're going to order a verification of employment, okay? What that means is it's actually going to break down your hourly, your overtime, your bonuses, your commissions, however you get paid. We're going to do that. Why are we going to do that? Because we can actually calculate it exactly, and in most cases, get more income, which gets you a higher purchase price.
What's up, Josh V, Apple user, Dora Del Toro, Carden.
CCG. Grr.
What does grr mean, man?
Means
What
he's
does grr
upset,
mean?
man.
He's
They
upset
laughed
with
at
what?
him.
I don't know.
Landon, if your credit score is 670 but got 6 hard inquiries, is that going to affect a loan?
Yes.
I say
yes.
no.
Well, I say yes. The reason
I say
is
no.
we're going to have to, at a minimum, explain every inquiry. When we get to the end of closing, they're going to go, okay, we're going to do a refresh. Hey, we have 6 credit pulls. And then you're going to have to sign a piece of paper saying why you did that. So at a minimum, it will affect you from the fact that you have to explain it.
Affect him, but not the loan.
But not the loan. Okay, I'll give you that.
We're asking about the loan
Yeah.
master salesman.
Okay.
Karma Stokes, can I get a DSCR loan if I own my home in Ohio and have lived between there and Georgia?
Yes.
I love Georgia.
Me too.
You know why I love Georgia?
Why? Georgia.
I spaced his name all of a sudden.
Georgia.
Jessica, send us some love.
Oh, Jessica, we got the hearts
5
and the
flowers.
roses. And Jessica, we appreciate you very much. Very
Brianna said,
much,
I got
much.
4 kids. I can't live in a box.
Nobody can live in a box. You can't put baby in a corner. You can't put Brianna in a corner with 4 kids.
Hell no.
Can't do it.
I wouldn't do it.
Robin, oh my God.
Give it a shot, man. Give it a
Shellheimer
shot.
435.
Oh, that's a good
Shellheimer?
job.
Yeah. Shared the live. Well, appreciate you, Robin. Thank you very much. Would
Ninja
you
Turtle
do a
loans?
Ninja loan? Ninja Turtles. Ooh, I love Ninja Turtles,
Ninja
man.
Turtle loans.
Raphael.
Leonardo.
Can you name him? Leonardo.
Michelangelo.
Michelangelo.
Donatello.
Donatello. Wow. this
What
guy-
was
this
their
guy's
sensei's name?
good. Dude. Shifu.
Splinter.
Splinter.
Master Splinter.
Oh, Shifu was Kung Fu Panda.
Oh shit, that was a real name?
Yeah, it was a
I don't
real
know
name,
Kung
yeah.
Fu Panda.
I do. No, we don't do ninja loans. Ninja loans are no income, no job, no assets. So ninja loans, those are gone. No way.
Yeah. So the closest to Ninja is stated income, or not stated income, non-QM loans. But guess what you need? 20% down.
20% down.
You don't want to show your income? 20% down. You don't want to
20%
prove
down.
it with W-2s? 20% down.
20%
You don't want to
down.
show 1099s? 20% down.
20%
You
down.
don't want to show taxes? 20% down.
When can I do 3% down?
If you prove it with W-2 or 1099?
And you live in the property.
Ooh,
if you're
residence.
primary residence, you can do 3 or 3.5 or even 5. If you want to know some real good details, go to realestatewrap.com and you'll get all the answers to all the questions
Of the
that
world.
ail you. That
the world.
kind of solve it and give you eternal happiness for the rest of your
So
life.
if someone said, hey, what's the meaning of life? What would you say?
Real estate wrap.
.com.
Yeah. For a first-time home buyer, call Chris and Lee.
I agree.
That's it. Yeah.
Mammy of Zero, good afternoon. How you been?
What's up, Mammy? Zero. Great to see you.
Brianna, well, in Cali, I make $48,000 a year, but I'm moving to Texas and planning on making $65,000.
That's
Better?
way better because Cali.
Better.
48,000 is rough to make it in Cali almost anywhere.
That's how
almost
much gas
anywhere,
is.
yeah. Almost anywhere.
How much is gas in Texas?
It's about $1.50 cheaper.
Damn.
Yeah, across the board.
Robbing us here.
So Texas, 65K, you're gonna almost double your lifestyle.
Nice.
Double.
Josh V, is it bad to pull out from a 401k for down payment?
You take that.
Josh, when it comes to finance, this is a very easy thing to approach, okay? There's no good, there's no bad. It's either appropriate for you or not appropriate for you. So I'll give you an example. Let's say that you're a 20-year-old starting your life, hitting it hard, making a little bit of cash, and you want to invest in the stock market where it's risk-reward 100%. And if you risk all your money, you could make a bunch and you can lose it all. So for a 20-year-old, I would say do it. If you were 65 years old,
Don't do it.
ready to retire,
Don't buy NFTs.
I would say no.
Stay away from
Don't
NFTs.
get into the stock market.
Don't
do
buy
not
NFTs.
do that. But that's not a good
Yeah.
or bad. That's either appropriate or not appropriate. If you're 65 if Donald Trump was 65 years old, or
Yeah.
DT,
Yeah.
can't say his name.
Yeah, don't say his name.
If he was 65 years old with his net worth and everything, then yeah, invest.
Yeah, have
so
fun.
it depends on where you're at in life. So, but I can let you know, Josh V, it's a very popular mechanism that many people use to purchase a house.
Yeah, we need TOW,
Yes.
called terms of withdrawal.
Yes.
And we need to know there's a certain amount that the IRS will allow you to do. And beyond that, you're going to have to pay for penalties.
There's a couple different ways you can do this. You can borrow the money through a loan, or you can access it to take it out and just buy a house. You need to talk with your CPA. You need to talk with your 401k company to see what their terms are, and then make that determination.
And then talk with your Chris and Lee.
after the fact.
Yeah.
After you check those boxes. Christabel Leva, thank you for the love. Napoleon,
One time construct. Yeah,
All right, let's
we
do
do
it.
one time constructs.
Max Martinez, any advice on first-time homebuyer? 680 credit, 15K cash, 120K income, both. That's a good file. Another good file.
Your advice is very simple. Get ready to be a homeowner. You're buying $500,000.
Oh my gosh,
That's good, right?
that's awesome.
Good advice. I think that was good advice. Yeah.
I love it. Austin New, not the old Austin.
Okay.
The new
A
Austin.
new Austin.
Can I get an FHA loan if I have collections? 700 credit score, 160K loan, 120K yearly income. Another good file.
Austin new.
You guys are
Yeah.
awesome.
If you have collections, we do have to factor them in, but it sounds like they've already been factored. If you have a 700 FICO,
I would say so.
yeah, they're already factoring it in, and I'm gonna guess in order to get that 700 FICO, one of two things happened. It's a long time ago, and the credit algorithm's kind of going, yeah, that was then, it doesn't count today.
It's the old Austin.
Or
That's why it's the new Austin.
yeah, or you just filed for bankruptcy, in which case you got a hard stop, and the hard stop's going to be 2 years, 3 years, or 4 years, depending on which program we go with. So right after bankruptcy, a lot of people don't know this, but your credit score goes up real fast, and you can't ignore that you're bankrupt.
I like how he did that. He's
Yeah.
like, hey, new Austin here.
Yeah.
And then the old Austin's the one with the bad collection.
Yeah,
So
okay,
good
got it.
job,
Yeah,
Austin.
yeah, yeah.
I like how you did that. When we get into new Lee.
Yeah.
Okay, guess we're never. Erica Avalos, what is the reference interest rate as of today in California? I think refinance was what she
Oh,
did.
refinance interest rates. Well, if you went to New American Funding website, you would see today's 15-year is 6.875. That's not my quote to you, because in order to do my quote to you, I have to put your credit, calculate your income, check your assets, then I give you your quote.
Have
But I am
lunch.
telling you, have lunch. But then I am also telling you that if you went to the links at the top and you went to cool stuff, you could see today's rates, and the 15-year 6.875, the 30-year FHA 6.125, 30-year VA 6.125.
Right. Justin Hill. Need to come to the broker side to give these people a better loan options.
Justin, I appreciate you, man. We do appreciate you. We do know the brokers. We do. Some of our best friends are brokers, and we call and go, hey, listen, how are your rates today? What's the best thing you can do? And I know the broker side. And we get options. We get all the time offers to go to the broker side. We still choose not to, because New American Funding is better for our clients. And because we're playing this long game, we're not trying to make as much money as we can off every client. We're trying to give them a good, balanced overall loan. So we make money, they get a good deal, and we're playing long game. So we
Thanks
appreciate
for the
you,
input.
Justin. Yeah, we appreciate you. Yeah.
Gel Rome, when is the lottery of Cal Halfa Dream for All announced? I don't know any of those in the pipe.
Yeah, we were not fans of the Cal Half a Dream for All, and we didn't put any in the pipe because of that. We didn't really follow it. Yeah.
Well, those that inquired about it, we pre-qualified.
Okay.
Some of them already
Yeah.
have houses.
Yeah, they already have something. We didn't wait around. We found different programs where they can. What's a broker? Okay, we're gonna get into this, Array, and I'm probably gonna. We're gonna probably piss some people off on this one, but we're gonna do it. We're gonna do it, Array. So grab some popcorn, maybe an iced tea or a beer, depending on what your world is like.
Weed.
Yeah, weed. Wow. Okay.
It's
So
legal in California.
when you go into the mortgage business, like what we do, we're loan officers. Okay, you get an MLS number. Mine's 944254. His is
1066958.
okay. So know that we have to disclose that legally. Now, there's a couple ways you can do it. One of them is you can go to work for a bank, in which case you're called a direct lender. So if you work for the bank, you have to set a commission rate. So you can set your commission rate anywhere from 30 basis points all the way up to, I've seen 200 basis points. That's about as high as you can go. So 30 to 200. Most loan officers today set their commission rate at probably 90 basis points, which is almost 1% of a loan. So that's and then you're captive. Now you're captive and you can't change your commission rates. You're in this. You're a direct lender. Now the direct lender fights for the lowest rates that they can get. So that's the direct lender. There's another way that you can pursue this business, and that is you can go to the broker side. And in the broker side, you broker every loan. And when you broker a loan, what you do is you set up an arrangement with a company, we'll call it AB Loans, AB Loans. And you say, hey, AB Loans, I'd like to send loans to you from time to time. AB Loans says, cool, how much commission do you want to make? So when you're a broker, you get to go, hey, AB Loans, I want to make 30 basis points, which is very low commission in the world. So because of that, AB Loans goes, oh, if you're going to make 30 basis points, I don't know what happened. Yeah, if you're going to make 30 basis points, then I'm going to give you this interest rate. Now, you go to XYZ Loan and you say, hey, XYZ Loan, I would like to make 300 basis points, which is very high commission for a loan officer, very high. So 300 basis points. And they say, okay, if you make 300 basis points, we're going to give you this interest rate. Now, obviously, XYZ Loan interest rate is way higher than ABC interest rate. Why? Because the loan officer is making a ton of commission. Now, in the broker world, you get to choose 20 or 30 different broker lines. All brokers do this, 20 or 30. So now they package up your loan and they have to make a very difficult decision. Do I want to make a lot of money on this? Or do I want to give the client the best interest rate and make a little bit of money on this? That's a tough call. It's a very tough call. And if you're in this game to make a lot of money, if you go broker, you'll make way more money. Way more money. Way more money. But your client won't get the best interest rate. Now, can the broker legitimately say, hey, I'll beat your interest rate? They can because they have ABC Loan. They do. Remember, the average direct lender gets their commission set at about 0.90 basis points, some 70, some 120, but somewhere in that range, 0.90. So the broker can say, I can beat that rate, and he legitimately can because he cuts his commission down to nothing. But if you start with the broker, do you honestly believe they're going to go to that lowest one or only when they have to beat a direct lender? So that's the key. Now, if I actually get a broker who beats me, and it occasionally happens, they're like, hey, Lee, I shopped you with this broker. Unfortunately, he's giving me a better rate. I say, cool, just give me the opportunity to fight back. That's all. All I ask for, if it's a better deal, I've actually walked from deals because I can't touch them. And I've said, hey, listen, this is better for you. I understand. I'm not happy, but I understand. And I'm not mad at you. And I hope when you come back for a refinance, you'll talk to me. But if you give me the opportunity, now, because we're high-producing loan officers, we go to the bank management. And we say, hey, Mr. Bank, we've been working for you for 5 years, and we put hundreds of millions of dollars through you guys. Here, we need a favor. Here's the locked LE. There has to be a locked LE. Here's the locked LE from the broker. I need you to beat it. And they'll go, okay, you know what, Chris and Lee, you guys do fund a lot of loans. We don't want to piss you off. So we will match it and then beat it by a little bit. And that way I can actually beat a broker. So there's two different worlds, and every loan officer has to make their choice. A lot of loan officers get into this to go, hey, listen, I just want to make a lot of money. That's all I want to do. You're better off on the broker side. Way better off.
You want to do 1-2 deals a month?
Yeah, 1-2 deals a month. You can still make 10, 20 grand a month on the broker side. A lot of money, a lot of money. If you want to play the game the way we chose, which is we want to build a big footprint, we want to be able to come back to our clients over and over and over again and give them a competitive rate, because we all get our money from the same spot. It's all Fannie Mae, Freddie Mac. It's all conventional USDA, VA. We all get our money from the same spot. The only difference is, how do we get to the client getting the end product? Some people say, hey, I'm going to make a lot of commission, and they do. There's nothing, I'm not faulting those guys. Some of those guys are my best friends. I just chose, Chris and I sat down and because we get offers all the time. They're like, hey, I know how much money you make. I could triple it. And you're right, you could. I could just like, I've had people literally offer me 6-figure checks just to go, hey, instead of pointing your car to that office, point it to my office. And I'll give you 6-figure checks. I have friends that got 7-figure checks just to change. Well, that's the difference between direct. Yeah, and then they didn't make it. Yeah, it's so strange. But this is a honest, legitimate spot where if a broker fires at me, they say, hey, I could beat your rate. Maybe you can. Yeah, sometimes.
We have a national platform.
Yeah.
Not every broker out there can do it nationally.
Yep.
Matthew Delgado, $3.19 per gallon in West Texas. Let me know if you want me to send you some. Yes, I'm on a truck, man.
We love it, Matthew. Matthew Delgado. Love you.
Brianna Monroe, well, you guys have to look at my husband's credit as well. He does it. How does it affect the loan?
You take that.
Okay, Brianna, you're in California, right? You want to move to Texas? Both of those are community state properties, which means you told the government, we're together on everything. Debts, income, everything. Okay?
Why are you using Louisiana accent?
I thought that was South Texas.
All right. No,
but whatever.
Yeah.
That's how they talk. So,
get us canceled,
here's what that means. If you're
already got a warning, by the way. We just got a warning.
I'm talking.
Yeah, we got a warning for what?
I'm saying words.
All right, you say words.
I don't know, age restrictions, something like that.
Yeah, I think so.
So, here's how it works. Because they're community property states, if you're doing an FHA, VA, USDA loan, we do have to combine the debts. So whether your husband goes on the file or not, we have to include his debts. Mm-hmm. If you move to a state that's not community property, then we don't have to, like Florida. Florida, it's not community property, so we could do you and only you alone with your debt and your income. But if you go with the conventional, we don't have to. Just know that it's much tougher to get approved for conventional, Brianna, and you've been telling me that you have challenges with getting to a higher purchase price, so it's probably going to be a federally insured loan like
I just
FHA.
saw Navy Mom Donna's in the house. I like to say hi whenever she shows up.
Oh, nobody else?
Everybody else? No, I say hi to everybody.
Show everyone the love.
Dude, Mario Shop Projects. I said, what's up, Mario Shop Projects?
So, yes, it can affect the loan, but here's what we're going to do. We're going to approve you this way and tell you the results. We're going to approve you this way, tell you the results, and you're going to pick what's best for you and your family. User 6213. I have, but don't want to use 20% down for a new home. How high is PMI if I put 10%? Do you advise?
If you have a great FICO score, PMI is not prohibitive. If your FICO score is just above 620, it's going to hurt. It's going to hurt a lot.
There it is.
Yeah. So, 50K in debt, 5C credit card debt, what's the only debt? 820 FICO. What type of APR can I expect?
Apper. What's your apper?
A mortgage in North Carolina. Well, if you have an 820 FICO, the best out there, like the best out there, but APR is a very loaded question because that involves what is my interest rate and how much did I use to buy it down. So I'm going to say your APRs are going to be in the 7, but I have a strategy for you. I do have a strategy. I'm not going to tell it to you today. You're going to have to tune in tomorrow for the strategy. Rates are a 2-decade high. Not a good time to buy. Reese, you're wrong. Wrong. I can prove it to you, but wrong. I can prove it to you. Whose balance sheet are you lending from? Whose balance sheet? We got one of those guys.
We got a hater.
T. Cook.
Tim Cook?
T. Cook. Tim Cook.
The CEO of Apple?
Dude, he's been, you know
what?
Why
are you hating on us again?
Dude, again? All right. Is it a good idea to buy a lot as collateral for a building loan? That's getting
unimproved land.
Yeah, unimproved land. The only way you can do that with a FHA, it's not even FHA or VA. It's called a one-time construct, and that's a construction loan that ties into an FHA. The FHA takes it out. I want a USDA loan, TBH. I want a USDA loan. To be honest, okay. Everybody wants a USDA loan, but until you find out where USDA approves. USDA approves certain areas that they want to grow, and they're not usually very favorable areas, but if you want to be far away from the city and far away from plumbing and heat and any comfort that technology gives you, USDA is pretty good. Yeah, you might be able to, you go to usda.gov, put in the address, and then the property gets approved by the address. Anyway, you know what time it is? We've been Chris and Lee. We are out.
Is that a heart you put up?
Yeah, kind of.
I just noticed that.